Welcome traders to this educational video of Nifty Analysis, episode number 34. In my previous educational video, I clearly shared that this particular low, which was made on 24th of September, was a very good support. The entire band of 10,700 to 10,800, this 100 points band is a very strong support. And if market closes below this particular low, only then we will be seeing lower levels coming up in the market. As soon as I posted this particular video, you can see immediately from the next day onwards, markets have started bouncing back. And today, markets have closed almost above 11,400 levels. Now, there was one more thing which I had clearly shared, that we need to watch the volatility factor very, very keenly, because generally what happens is, if a particular bounce which comes in the market is only a dead cat bounce, because generally markets don't fall down every day. There will be a short small bounce and then market will make a new low. So generally if it is just a dead cat bounce, the volatility will not come down. And I have checked through various indicators that the volatility has come down, but not that much where one person can confidently say, yes, this is a bottom out pattern or something like that. But considering this particular candle which has been made is extremely encouraging. So what we'll do is, as usual, we'll start from the higher time frame chart and then we'll grind down slowly and steadily towards the daily time frame. So we can see that today is the 1st of October. So we have a month and close candle of the September month, and this particular candle looks like a hammer, correct? If this hammer candle is made somewhere at the bottom of the trend, which we can see over here, then it is extremely encouraging. Generally, candles made at the middle part of the trend do not have that much of significance. But what I can see is that the market is range bound and choppy in the short term. That is why the previous candle of August, we can see it looks like a shooting star. The next candle looks like a possibly a hammer. So we can see buying, bulls being active in the range of 10,800, 10,700, which I had mentioned is a very good support. And higher levels, we can see bears coming up and pushing the markets slightly on the downside. So generally in the weekly chart, I cannot see anything much encouraging, except one thing which we can see, that this MACD is coming very close to each other. If we have a positive crossover and if Nifty gives a breakout, then the upside move will be very fast. In the weekly time frame also, nothing much has changed. As in the last video I had shared that the 23.6% Fibonacci retracement will act as a very strong support, and it has proved to be so. And we can see market has not even able to trade below this particular level in this entire week. All right. And nothing much in the indicators except one thing. Again, the MACD is coming very close to each other. If there is an up move, it signifies that it could be a very powerful move on the upside. Let us go to the daily chart. In daily chart, things are slightly different. First thing is that the price has closed above the 50 days simple moving average once again, changing the trend on the upside. Now there is a small trend line breakout in the RSI. If you can see it properly, there is a small trend line breakout in the RSI. Generally, RSI breakouts come before the price happens. Price goes through that breakout generally a little bit later, but that does not mean that the breakout will come in the price. The breakout in the price has to be confirmed with the breakout in RSI. So we can clearly see market is trading at a resistance point. It's not a very big resistance, but yes, we should not disrespect this particular level. Also, if you see properly, as per Dow theory, we do not have a higher high, higher low pattern in the daily chart, because we can see this particular high, then we can see this low, again this high, again a low. So continuously price is making a lower high, lower low pattern. According to me, if we break out above this particular trend line by closing basis, and if we close at least I would say 11,550 above that level for a couple of days, then we could see a breakout in the Nifty coming up, and the probable level which could be tested on the upside could be possibly somewhere around I would say 11,700, 11,800 possibly, and possibly even I would suggest 11,900, slightly above that. All right. So these are the levels on the upside. Now we should understand one thing. In the starting of the video, I shared one more thing, that the volatility factor has not come down. So is it that the bottom has already been made? The answer is no. First, the Nifty spot should close above 11,550, stay above that for 2 days, and then slowly and steadily as the price starts moving up, it will automatically signal, the price will signal you that I'm going up, and you will see all of the stocks and sectors also going up. Because what can happen is, if volatility has not gone down and after a dead cat bounce, if it suddenly starts falling down, and if you fall prey and if you start buying somewhere over here which is a resistance point, then unnecessarily you will go through a series of stop losses. All right, so understand this thing, and be very careful about this particular trend line. This is a small trend line, but do not disrespect it. All right, so let me know in your comments below how did you feel about my video, and share with other traders also. If you feel my videos are useful, if my educational videos you find very useful, share it with other traders, and I'll keep sharing good content on my YouTube channel. Thank you.